Hello there, Maverick Traders. This is Rob Reinhold. This is the Trading Room, and look at that date. We have July monthly options exercision coming to us fast on Friday. Let's jump into it. In this session, we're going to talk about the news of the week. We're going to go through some of the commodities. We're going to talk about crypto here because big breakout on crypto, and I've got a bunch of trades for you as well.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Right, let's first start off with last week's news. We continue to see new all-time highs, at least on the NASDAQ, made a new all-time high on Thursday, but the markets were flat for the week at the end of the week, but it was all bullish. We had plenty of bad news that the market could have reacted to, and part of that bad news were the tariffs. Last week, I talked about how I was a little bit worried about this week with this tariff deadline coming. Well, the tariff deadline was moved from July 9th to August 1st, so we kicked that can down the road a little bit, but it came with lots of threats of new tariffs that the market is not anticipating. A tariff on copper, a tariff on pharma. So there's all these things happening, and the market shook them all off. It just shook them all off. This is a sign of bullishness. When the market ignores bad news and celebrates good news, it's a clear sign that there's just money coming into the market. You might argue against it. You might argue that's not good news, that there's a whole bunch of bad news, but the market is telling you it's going higher. So just get on board. I was saying sometimes you got to plug your nose and buy. It just stinks, but you got to plug your nose and buy because that's where it's going. And then we got crypto breaking out. We had Bitcoin breaking out to 118,000 from previous resistance of 111,000. All the cryptos want to tear. This is where cryptos do the best. A very, very bullish market with low and falling volatility. This is crypto's happy place. I think we're probably going to see Bitcoin move up to 130. But if you take a look at on a percentage basis, that's only about a 10% run from here. That's a small run for Bitcoin. We're going to start seeing incrementally smaller percentage moves in Bitcoin as it moves higher and it becomes a little bit more mature. But everything looks good on the crypto side. As far as last week's news goes, there's nothing to talk about, so let's just skip it and move on to our market analysis. Let's first start off with the numbers for the week. We had the Dow down 0.5%, S&P down 30% along with the Qs. The Russell that's been red hot lately, it even backed off. Okay, this is a slight down week. That's it. Gold, oil having a nice week. We take a look at these charts. I just want you to look at these candles. Yes, we did have some selling on Monday and Tuesday. We had selling Monday and Tuesday. But we got a gap up Wednesday, closed near the high. We got another gap up, closed near the high. They're not big candles. And then we got a gap down, closed closer to the high than the low. Look at all of the candles here. Long lower shadows on almost all of them, and they recovered. It's just showing you that people are buying the dips. Any dip that's happening in this market, people are buying. This is a high base. We likely are going to base for foreseeable future until we break to the upside. This is a frustrating market for the bears because they have plenty to complain about. But these are where the markets are the strongest, when they're climbing a wall of worry. You've heard that saying before. Climbing a wall of worry is actually really good. When it's not so good is when all of a sudden everyone gets on board, all the bearish people finally turn bullish. Yeah, then you're probably at the end of the run. But when there's people fighting this, these are the strongest markets. Like I said, you may be a bear. You may think that it stinks. Plug your nose and buy. Plug your nose and buy. Your account will be happier for it. And I've been saying that for the last 2 to 3 months. Just plug your nose and buy. I get it. I hate it as well. Just plug your nose and buy. Be bullish. That's where you want to be. The NASDAQ, just look at this. Just going sideways, but cranking a little bit higher in the process. The heat map tells us nothing really here. I mean, there's strength and weakness scattered all over. We did see a pretty big little bit of weakness here in the telecom services sector inside of communication services. Telecom and communication services actually was one of the biggest down moves this whole week. Let's talk about next week. Here we are. We're in late summer. I hate to say that because we're not in late summer, but it sort of seems like it. Midsummer, lower volatility, very bullish conditions, +3, tons of money just pouring into the market. Any bad news is completely disregarded, and any good news is celebrated. Yeah, that's where we are. Bull market. We do have these tariffs coming. We'll have to see what actually happens, but the market could have freaked out like it did in April, but it's not. So it's looking through a lot of the bluster, a lot of the threats, and the market seems to be okay with what's happening. Of course, there's always a chance that volatility can spike. The story you could basically say any day in the market. Here we have second quarter earnings start this week. We've got some pretty big names this week starting on Tuesday with the banks. So make sure you do know what earnings are coming up in your trades and make sure you're trading them accordingly. We also have CPI on Tuesday of next week. I think this is going to be not a super important report, but take a look at the forecasts. Big jumps here from 0.1 up to 0.3. If it comes above 0.3, the market might have a little issue with that. I don't see a real problem. And then I also think retail sales are another one to watch. Last month we had abysmal retail sales and the market shook it off. If that happens again, it's going to be harder to shake off. But again, markets are just bullish here. They're just bullish. I know you want to fight it. I shouldn't say that to everyone, but those of you who are my bears, I know you want to fight it. I know you don't want to believe it. But we've been saying the same thing for weeks and weeks and weeks now. At some point, it will top out. I agree. Do I think it is next week? Not at all. There's nothing in the charts to tell me it's going to be this next week. Let's take a look at sectors. All right, if we take a look at the performance last week, as I pointed out, comm services was quite weak along with financial. Both of these are getting a little bit of a downgrade this week. Consumer staples was weak. Everything else was pretty much flat on the week except for energy. Energy had a very nice week with oil up another 3% this week. Let's go ahead and score these. Let's start off with utilities. Utilities was a +1 last week. We're going to go to a +2. And I really like how this is building some momentum here. This lower trend line pushing up against the higher trend line, moving averages pushing up on this. This to me looks like it wants to move higher. I'm going to slightly upgrade utilities to a +2. On the flip side, we're going to downgrade communication services. Now look, a pullback is normal. It's natural. This is what I'm seeing though. This candle right here is significantly weaker than the rest of the market. Significantly weaker. We had green candles in the market on Wednesday, Thursday, Friday in the S&P, not on this one. So there was still some selling. Either this is done or this is a good pullback to buy into. I'm going to trust the trends. I'm going to trust the charts. And I'm going to say this is a good pullback to buy into. With that being said, I'm backing off from a +3 to a +2. Just not as bullish. I'm not going to say it's one of my favorite sectors out there. It's a sector I can play. Real estate was a 0, stays a 0. As you can see, moving average is flat, nothing going on. Healthcare, same thing. Was +1 last week. +1 this week. If you want to call it a 0, call it a 0. It's fine. Again, 0 to slightly bullish. Here we have industrials. Look at the candles on this over the last week compared to what we saw in communication services. This is still getting buying. People are not slowing down even though it had a substantial run. To me, industrials are still a +3, the strongest sector out there. Next up, financials. All right, so financials are still a +3. They didn't get a downgrade, but look at the difference of these candles to what we just looked at in industrials. It was a different week for sure. We have 4 red candles out of 5 days showing us that it's opening up and selling off, opening up, selling off. We are getting more selling than buying here. I'm still bullish financials, but not as much. Not as much. I want to see the buying come back into it. Let it bounce down at that 20-day moving average, and then I'll get a little bit more excited about it. Here we have consumer discretionary, just making a nice little upward candle here. There's no reason based on technical analysis to think this won't break out and move higher. So I am at a +3 on consumer discretionary. Consumer non-discretionary, 0. We're just hanging out right around the moving averages. We're not going anywhere. If we do break below this last low, it will get a downgrade, but until then, it's just going to be a solid 0. Technology, look at the candles. These candles are much different than the financial and comm services. Much stronger, so tech stays at a strong +3. And here we have materials. Take a look at these candles. Take a look at them. These are the best candles of the week, by far. This had the most buying of anything in the week, so we are upgrading from a +2 to a +3. We come over here to energy, and you can see +3 as well. Coming up to that resistance, but we've got this nice lower trend line pushing us higher here. No reason to think this one doesn't break out to the upside as well. This is where we were last week. We're going to upgrade energy, materials, and downgrade comm services. And we're just going to upgrade utilities to a +2. You can see lots of strength out there. But the strongest of the +3s are definitely industrials, technology, and material. Let's take a look at where we are for the week. We had 5 trades roll off. We had 3 roll off at max loss, 2 roll off at max gain. So not a great week of options expirations here. But again, it was a mixed bag for sure. Right now, we only have a couple trades left on. As you can see here, 4 trades. We've got lots of slots that we can fill. Remember, with the slot system, you get to decide how many slots you fill. You get to decide, okay, these are my slots that are available. Where am I right now? How many can I fill? I'm just looking to fill a little bit more bullish. Could I go a real heavy +3? Yes. But I just want to be moderately bullish here. I'm looking at 6 trades this week. Comm services adding at a +1. I do think this is going to bounce off a pullback, but we'll have to wait and see. Healthcare to neutral. Industrials, consumer, tech. These are the strengths. These are the strongest sectors here. I already have a materials, so I can't add one there. And then I'm going to add one in energy as well. So let's go ahead and jump into some of those potential trades in those sectors. First off, comm services. Remember, the comm services sector was in a pullback. Take a look at Google. This one just looks like it wants to go. It is it's outperforming what the sector did. And you can see here, the candle on Friday looks wildly different than its sector candle. I don't see any reason why this one doesn't break out. The only issue with this one is earnings. Now look, I don't mind playing earnings. Earnings are next Wednesday, July 23rd. I don't mind playing earnings because I want to make it to where I've got more reward than risk. That's my rule. If my trade has more reward than risk, so if I'm doing this spread like this July 25th, 180, 185 spread, I'm going to pay about $1.80 and I'm going to have about $3.20 of upside. So if there's a big move off of earnings, it could mean $3.20 of profits or $1.80 in losses. I like that. I'm totally okay with that. Where I'm not okay with it is if I have $1 of upside and $4 of downside. All of a sudden, I don't want a big move. A big move isn't going to help me. It's only going to hurt me. So I'm looking for a +1 trade. +1 trade. So I'm going to avoid these earnings altogether. I'm going to do the July 18th, 175, 180. And that's going to bring you in it's going to cost about $3, $3.20. You've got $1.80 of upside, and you will be out of the stock before earnings comes in. So that is the +1 trade in the communication services sector. Healthcare was a neutral trade. I came across Eli Lilly. I've had this one on the neutral watch list for a while. It is just trading in a range. Where's that range? Let's call it 760 at the bottom, 820 at the top. So again, you got to pick your midpoint. So if you were really looking at this range and saying, okay, I want to be truly in the middle, then 790 would be your inner strike. So you look at doing something like a 760, 790, 820, or a 750, 790, 830. I'm going to be just a touch more bearish. I'm looking down here saying, okay, I like 780. I like 780 as the point. That's what I'm going to choose, 780. Now, people are going to say, Rob, why did you choose 780 over 790? I'm looking to be a little bit bearish here, just a tiny bit. Nobody knows. Flip a coin of where this is going to be. I don't care where it is. I want the range. So for me, 780, the profit range is going to be right about in here. I think this is going to stay a little bit down here low in this area. I don't think we're going to approach up here to the 820. I think we're going to be hanging out down here. So I want to be in there with my butterfly at 780. If you think it's going to be truly sideways, then 790. If you think it's going to be a little bullish, then of course 800. But for me, I'm looking at the 740, 780, 820 butterfly for July 22nd on Eli Lilly. Let's get into our three most aggressive bulls. Industrials is one of my favorite sectors. This here is New Scale Power, SMR. This thing had a massive run, 15 to 30. So the stock more than doubled. And then you can see here, we went sideways. We had a breakout all the way up to 45. This has been a big run. This has been a big run. And we are now getting into what is a bull flag pattern. So you've got this big run. You get this very slow, shallow pullback. We're just waiting to see a bounce here. I like this one quite a bit, but I want to give this thing a little bit more time. So I'm going to go out 3 weeks, looking at the 37.40. As you can see, I'm not saying I think we're going to break to new highs, even though I think we are. This here gives me the risk reward I'm looking for. This gives me a 2-to-1 risk reward, and that's what I'm looking for on my +2. But if you want to be more aggressive, I really like this one. I don't see any reason why this doesn't make a run up to 50. If we stay in this +3 environment with low volatility and this thing could break out, I think this thing can make a run to 50. So if you want to be super aggressive with something, take a look at this SMR, New Scale Power. I like it quite a bit here on a bull flag. Next up, consumer, looking great. All right, I just talked about Google. Here I am at Amazon. If you've been listening to me at all, I rarely trade these stocks. And let me tell you why I rarely trade these stocks. Number one, I'm a little bit paranoid. The reason I'm saying that is that the common amateur trader always just looks at these names, Amazon, Google, Meta, Tesla, and that's what they trade. And look, there's nothing wrong with that. A symbol's a symbol. They have great volume and volatility and liquidity. Look, I get it. But is this the best trade in the market at the moment? I mean, it's not that hard now with scanners to go find other stocks. So if you want to be long in Google, you know what? Isn't there probably a better communication services stock out there that just take a little bit more time and find something stronger? So whenever I come across these, and these truly are the strongest, I'm like, okay, am I falling into the trap of just trading what is familiar and what is popular? Or is this truly the best setup in the sector? And it's truly the best setup in the sector. Both Google and Amazon are the best in the sector. I double checked. I made sure, like, are you sure you want to do Amazon? It's very trendy. It's very popular. This thing looks fantastic. This thing looks absolutely wonderful. So it's just a matter of how do you want to play it? I'm looking to be a +2. I want to get a really good risk reward. I'm looking at the 225, 230. Going to pay probably about $1.70, $1.80. That's going to give me some nice upside potential here up there. I think 230 is a reasonable target for this. Could I go higher? Yes, but then it would be a +3 trade, and it's not what I want to do. Earnings for this one is July 31st, so that's why I'm not going out that extra week. I want to avoid that earnings on July 31st. I don't mind being in earnings because, again, you have a bigger reward than risk. What happens on these trades where you put a spread on and then earnings are literally the Thursday before the expiration period, the trade doesn't do anything until that Thursday. So there's really no reason to get into it because that volatility premium is going to be so puffed up that the day before earnings, the trade is likely going to be at a break even. Even if it's gone up fairly substantially, it's still going to be to break even because of that puffed up volatility. I just want to avoid that, so I'm going to make sure to get out of the trade before earnings. And technology was our other aggressive trade. Here we have AAOI, Applied Optoelectronics. Just a beautiful little chart here. We're getting some nice high base, maybe we'll call it ascending triangle pattern. I don't care what you call it. It's still bullish here, looking to break out. There's some resistance up here. Okay, this is where, as long as you give it a little bit more time, I'm looking to go out 3 weeks. I don't see any reason why this thing can't move up into the 30s. I just don't see. Could it go all the way up to 34, 35? Sure it could. Just like the SMR trade, if you want to be more bullish than this, then I think the chart absolutely supports it for a run up to 35. But for me, I'm looking to be 28.31. That fits my delta requirements on my +2 trades. And let's finish this off with our energy trade that we already determined that we're going to be a +1. This is Cenovus Energy, Canadian company. We have a nice trend line here, and you can see we've just moving through levels. We had a deep pullback. Here we are moving up, moving back up to this 15 area. So the question is, okay, when is this going to break? I could easily see with this bottom trend line, maybe it hits 15 again and bounces down. We have to have one more move before a breakout. This is where I love to pull out the diagonal call spread. It's my favorite strategy in these kind of markets. +3 markets with falling volatility, diagonal call spreads are great. I'm going to be opening up the August 15, 13, selling this week's July 18. So 15 is where I want to be. If this thing closes at 15, it's going to be a great trade. But if it closes at 15 and looks like it's going to break out, I would love to either let this July 18th option expire, or maybe I need to buy it back for a couple of cents. Because if it's going to be breaking out of 15, I've got all the way till the August monthlies to enjoy a nice breakout and run and just have long calls. So this is a trade where it starts at a +1, but it can go to a +3 if you want it on July 18th. You can say, let me let that expire and let me just hold long calls and ride a nice run. It's one of my favorite strategies in these kind of markets. Let's go ahead and wrap this up. Markets are priced for good news. We've seen that. The market seems to be just fine. Money is pouring into the market. You can throw your hands up in the air, but just don't fight it. That's what's happening. At some point, it will change. I know. I agree. It's probably unreasonable. But just jump on board. Jump on board. Earnings season is here. As long as corporate profits don't fall apart, and I'm wondering if companies are actually feeling better today than they were the last time they gave guidance, which was in April, right after the shock of Liberation Day tariffs. My guess is they're feeling better today than they were. I think they're going to be giving better guidance and more upbeat guidance than they were in April, which is going to support higher prices. We'll have to wait and see, of course. No one knows. That's why we do this every week. We come back and analyze everything, and if we were wrong, we throw everything in the garbage and start from scratch. Thank you very much for joining me. Everyone have a great weekend. Goodbye, everyone.